We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, continuing to fight and hold support here. And in today's volatility, our SPY bot at 10:10 a.m. sent out a bear indicator, and from that moment forward, outflows crossed the midpoint to the downside. Pure weakness down 42 vision, and put options went up 250% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY, the S&P 500 index, fighting to hold support. And in today's video, we're going to break down the key levels I would watch going into tomorrow. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run today was spectacular and beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together. So the home run today was from our Tesla bot. Our Tesla bot at 10:15 a.m. sent out a bear indicator, and from that moment forward, outflows crossed the midpoint to the downside. Pure weakness down 42 vision, and put options went up 150% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump to these charts. Here we are with the SPY, the S&P 500 index, doing a full transition here from bright green bars to white with red borders. And if this is your first time coming across the channel, this is 42 vision, which allows us to see the dips from the rips, the rips to the dips, and where the strength and weakness lies within the charts. And we also use our bull and bear indicators and inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the S&P 500 index, the SPY stock back under a bear indicator here at 564.51. And in the last 2 days, we were watching the support here of 560 and 562 being used. And it continued pushing up yesterday to retest up here 564 and the 565 resistance and key level we were watching to the upside, right? And now it rejected off of it. It did a double top basically up here if we take a look at it, and a bear indicator popped up at 564.47 near these all-time highs and 52-week highs. And at the open, we started to drop sharply pretty quickly after rejecting 560, and a double bottom has formed here towards the end of the day near the 556.50 level, and it's trying to push up here in the after hours. But this bear indicator is dominating, and not just on the SPY, but you could see the QQQ has been under a bear indicator since Monday at 497, rejected off of that at yesterday's open, and continued sharply down towards the 480 area. You have Tesla here within the chop, back under a bear indicator here at 252 level, and then you have Apple here continuing that weakness with the bear indicator that popped up yesterday at 234, and just round that up to 235. It rejected it right there going into the close, and a sharp drop back down here towards key support levels of the 226 to 228 area. Now, here we have the SPY in the bigger picture of the 1 hour under a bear indicator as well. This is the first bear indicator that pops up since the bull indicator from 557.60 area, and that's exactly where things are trying to find support. We are at some key levels here within these charts. Multiple rejections above 563, 565, the resistance levels that we were watching to the upside, and then coming back down to key supports here of 556 to 558. Now, the bear indicator did pop up here at 564.50 area, and it's something to not ignore. A full transition has happened as well from the rip area to the dip area, and this support level here will be crucial for the possible next leg up if it holds. If not, it could get retested if this bear indicator continues to hold over the chart. And then also within the volatility of the 15-minute and 30-minute, we continue to see weakness. But here we are trying to push back up here, and it's going to be crucial for inflows to follow to justify it, which I'm going to pull up in just a moment. And a bear indicator popped up here on the 15-minute chart within the volatility at 564.44 and dominated all day. Now we're going to break down the key levels I would watch going into tomorrow and what's going on with the inflow versus outflow. Here we are with the SPY, the SP 500 index, with outflows dominating. At the open, they tried to turn green, but all this action was happening below the midpoint. You could see why the weakness was there, right? As soon as it rejected 560.40, 560.50 area, and it started dropping, it was a key indication here that outflows were dominating by being below the midpoint, and any move to the upside to be justified and backed up with the data. These inflows needed to continue green and cross the midpoint to start reflecting that strength into these charts. And then what happened? They flattened out. They were still negative 2.24, and then once it turned red, the acceleration started to happen in these charts from the 558, 559 level all the way down towards 556, and outflows have dominated all day. Now, we are having inflows pick back up here. They're at negative 2.26, even though they're green. Now it needs to cross the midpoint to justify any move to the upside here on the 30-minute. Now, when we zoom out and look at this from the 1 hour, we could see those outflows had not just crossed just yet. And this is what went ahead and confirmed with clarity why outflows were dominating and things were dropping and not having enough strength every time it tried to come back up. They stayed red and they crossed over into the open, and every time things flattened out and consolidated or try pushing upwards, these outflows were dominating all along, and a full transition from the rip area to multiple dip areas have happened. And we're here at historical levels of support trying to bounce back up, and it's crucial here for these inflows to continue pushing upwards in the bigger picture, again, to justify any move to the upside. Now, in the volatility of the 15-minute, we can see here how quickly inflows tried picking up. It hit that high of 560.50, rejected it, and outflows dominated all day. And that's why we are seeing here things slow down between that 556 to 558 level as inflows continue to try pushing up every single time it finds support at 556. Now, we do have a divergence here of inflows trying to pick upwards, heading towards the midpoint while the stock was flat, and now it is starting to pick up. To justify that move, these inflows need to cross the midpoint. Even though they're green, they're still negative 0.32. Now, if these outflows push away to the downside, it could quickly start to reflect that weakness into these charts. And the first support I'll be watching is 556 to 555. And then below that, it will be the 553 level. Now, to the upside, it's going to be crucial and critical here for these inflows to cross over the midpoint, roll that strength over into the 30-minute, and continue this staircase effect here. And the first resistance is the 560 level, and then above that I'll be watching the 563 area. And these are the key levels I'll be watching to the upside and to the downside. These inflow versus outflows, I would not ignore them as they're green. And as always, guys, thank you guys so much for watching, and let's make some money.